Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Soo-young, professor of economics at Chung-Ang University. Professor Song, thank you for making time today.
Yeah, good to see you again. Yeah, Devin.
Well, the Korean stock market's obviously plunging this afternoon. The KOSPI by close to 5%, putting it below the 1,600-point mark, which is a psychologically significant level. Dozens of companies no longer in the so-called trillion won club in terms of market cap. What's the story today in the financial markets?
Yeah, currently the close price of the KOSPI is 1,591.2, so it is plunged by 4.86 percentage points. So all these sectors had suffered from the declining stock price. So, but actually all the world but the United States, particularly in the UK and the United States, they have the stock price S&P 500 has been increased a lot, not a lot, but a little bit. But however, the future of the stock market has been plunged. So also it implies that the US and the UK and the other countries also, they are very worried about the plunge of the stock market. The main reason why we have suffered so much drop in Korean emerging market, or not emerging market in Korea, and particularly in Japan, is because the algorithm trading and the program trading has automatically they have decided to sell the stocks. So that's why we have seen some expedient and a very steep decline of the stock in the later part of the day. Yeah.
Well, that's an interesting point. In terms of the broader economy, though, lots of voices saying here in Korea it's going to get worse before it gets better. What do you think, Professor Song?
I think this kind of tendency would continue as long as because of we have not seen yet the decline of some outbreak of spread of the coronavirus. I think in U.S. and the U.K., particularly in European countries, they start. Even though China had shown declining speed of the outbreak spread of the coronavirus, but the problem is already China has suffered from some declining demand in China, particularly for the commodities and the metal scraps from Florida and the other countries. And then with the plunging oil price, and then it could have a vicious circle, some perfect storm. It's going to be a perfect storm for the world economy. So even though the coronavirus externality, but the worst one, I think is going to be the worst one right now.
Well, a lot's going on. You mentioned oil prices and other things. U.S. Treasury yields are rising, though, in anticipation of more fiscal stimulus. But now with the coronavirus officially a global pandemic, it would seem that trade and all kinds of exchanges are going to grind to a halt. How bad is it at this point?
Actually, in the 10-year, the yield of the U.S. Treasury volatility has soared a lot. So I'm not sure that whether it is the reason why the volatility yield is increased is that the price of the U.S. Treasury bonds has been dropped. That's why the yield is increased a lot. So it means that despite the fiscal stimulus, and then later on the interest rate would be increased later on. That's why it becomes very popular for the long-term U.S. Treasury bonds. But I believe that in the long run, that might be the case. But currently, the volatility has been increased. It implies that the uncertainty and the peoples and are uncertain about the future of the economy, whether it will be temporary or transitory. But at least it is going to have it's going to continue in at least 1 year, at least because aggregate demand is already affected a lot.
Got it.
Let alone the aggregate supply, yeah.
All right, Professor Song, we'll have to leave it there for today. Thanks so much for coming on and sharing your insights.
Thank you.